best crypto asset? Bitcoin's the best crypto asset. Which one's the best crypto asset? Bitcoin's the best crypto asset. Which one's the best? 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 What's the second best? There is no second best. Which one's the best crypto asset? Bitcoin's the best crypto asset. Which one's the best crypto asset? Bitcoin's the best crypto asset. Which one's the best? 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 What's the second best? There is no second best. Which one's the best crypto asset? Bitcoin's the best crypto asset. Which one's the best crypto asset? Bitcoin's the best crypto asset. Which one's the best? 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 Which one's the best?
I kept doing the live intro because we are excited about what we're seeing in the markets right now. Welcome to the Discover Crypto stream, everybody. Welcome to the show. We're seeing the show play out in just exciting real time right now with the pump we're seeing pushing into tomorrow's data, that rate cut data that should be coming out here in just a matter of hours now. But we're seeing the price action on Bitcoin starting to make its headway to the upside. And this is exciting because especially if you zoom out here on this chart and realize this green line, it's not just some random line we have drawn. This is a trend line that is projected from the previous two tops back here in April and also here in November of 2021. Yes, this has been the gateway for the price action as we see it right now. We had a bit of that move to the upside, retested it, another fake out, and then yet again, we met that with the fake out to the downside, came back above and just finally retested this again. It's kind of funny when you zoom out and realize that that move to the downside was just the top side of this local range. Price action came back down with a little wick below, but the candle bodies all maintained above this multi-year trend line. That's what I'm talking about. How you all doing? I hope you're all feeling good. I know you're looking good. I know your portfolios are starting to look even better. So shout out to everybody that's here. This is supposed to be streaming on Pump Fund, but it looks like there is an issue with that for some reason. I don't know why, but we are live on X. We are live on the BitLab YouTube. We are live on Discover Crypto X, as well as what we're seeing in, as well as what we're seeing on the Kelly Kellum X. So everybody, markets, exciting. Let's go through some of these things. We got a guest that's going to be popping in here with us in a little bit, breaking down exactly what some of the most core, base fundamental signals that we're seeing in the economy right now that can give you an edge as to what to look for over the next couple weeks into the couple months. But first off, let's start right here. Let's start right here on the most basic, and that is the coin market cap. We are back above, not still, but we are back above that $4 trillion market cap on crypto. Fear and greed still very neutral. This is looking actually incredible in terms of the setup of what people are expecting. If you're expecting it to crash, the fear and greed doesn't signal that. If you're expecting it to pump, this doesn't signal really anything, meaning it's not overheated or underheated. We got to look to the other signals in the chart. Going back over to this main chart set of indicators right here, free tool, coinmarketcap.com. Come here to cryptocurrencies. Go over here to market cycle indicators. Now, this is going to be a basic look, but what you see on this basic look, again, we are nowhere near a top, at least as indicated by these 30 very important indicators that have identified tops in previous cycles and in previous topping environments. And in case triggered, X's all the way across the board. So what are we looking at right now? Well, first off, Denzel Washington says, my man. And what is he talking about? I don't know, but that's how I'm feeling when I look at this chart right here. Beautiful setup, but it doesn't mean we're out of the woods for a potential dip. I want you all to start realizing, because you might see on a 4-hour chart, on an 8-hour chart, even on a daily chart, a setup for a pump. It doesn't mean it's guaranteed. It's similarly, if you are so sure we're going to break down. It doesn't mean that's guaranteed, especially with the landscape we're seeing across the crypto environment as we speak, because it's not just Bitcoin. When we get back over here to these charts and realize that the total three, looking at this, total three, starting to see some movement to the upside, but this is on the daily. What does it look like on the 4 hour? Nice movement to the upside on the total three. This is everything excluding Bitcoin and Ethereum. And what do you notice? Currently, this price action on the market caps, this is all the market caps. That's why you see 1.12 trillion. This is all those altcoins, all their market caps added together and charted. We see this currently, this push is nice. And technically, yes, we have started a breakout of a downtrend, which would be just like that. However, this currently is only pushing up right into the butt of where this previous range little chop lows were right here. So we'd like to see some movement beyond this level to have confidence in the altcoins really starting to move. And you can tell this because on the Bitcoin dominance, you are seeing, let's zoom out a little bit on this. The Bitcoin dominance does show that we have been pumping over the last 3 days on the Bitcoin dominance. And this is also reflected back again when you're looking at everything outside of Bitcoin and Ethereum. Yes, this has been dropping that same time period. So you see how these things are interrelated, but we're getting overwhelming bullish news, very bullish. But again, this is fundamental in terms of the springboard of what can happen in the near future. And that is looking at this $3 trillion Google just partnered with Coinbase. Google and Coinbase just partnered. How can you think we're near a top? However, don't forget about the Coinbase ICO. The Coinbase IPO a couple of years back that did mark a relative top in the market. So while this is overwhelmingly bullish for the mid to longer term framework of the crypto market, this is, especially considering the rate cuts tomorrow, considering the money printing that's coming. And of course, there's going to be a number of rate cuts over the course of the next several months. This, to me, doesn't feel like a top. Yes, this is overwhelming bullish news. Yes, overwhelming bullish news like this with traditional sort of launches like we've seen with Backed when the futures launched, also with Coinbase IPO, some things like that. Well, in this case, I think this is going to be something that's going to really drive the fundamentals forward. Beyond that, we also see X402, Google just unlocked a new level of AI agents. Remember, AI, a lot of these AI agentic models that are going to be deployed, there's a huge argument to be made about the rails that they're going to use for transactions and payments. Case in point being blockchain, crypto, and things like that. So pay attention to what's happening here because this could be opening the door for some massive liquidity coming in to the crypto ecosystem as this gets deployed and really developed and integrated throughout the ecosystem. But then again, one of the things I'd like for us all to pay attention to in terms of framework for where these things are going, and I've shared this chart before. This is gold versus Bitcoin performance, 200-day lag. Okay, gold M2 versus Bitcoin, 102-day lag. And what we're seeing in both of these instances is the magnet of liquidity to the upside, or at least indication based on the correlation that we've seen play out so far. And look at the dates here. This goes back until 2000. These dates, when you sort of move them over onto this lag data, we can see massive moves to the upside have followed on both assets, okay? We've seen this, and it also says Bitcoin has a 100-day lag versus gold. Christmas is 100 days away. Are we about to see the gift of Christmas start to form right now for those of you that are actively invested in the market? You're taking positions, you're DCAing, you're being patient, you're doing the smart thing. Well, we're going to be getting Caleb on here in just a few minutes and talking about what some of these indications just may be and what they're really signaling. So let's pay attention to that. Let me move this over real quick just so I can see the comments as well. I cannot see beyond that. Cancel. There we go. I want to go back over here. That's not what I want to see. Edit. No, I want to go to comments. There we go. Cool. Now, let's get into the other data we want before we have our main guy coming on. And that is currently the liquidation heat map. We are seeing a pinch in a pocket of both above and below the price action right now. There's people betting long, there's people betting short. In fact, some of this liquidity that you see in these very hot yellow zones may not even be investors and speculators like you and myself, where we're bullish, we think it's going to go along, or we're bearish and we think it's going to break down. Some of this liquidity in these areas is also market makers. It's also major players that are trying to incentivize or influence where you think the price action is going to go, creating these sort of visual barriers, these liquidity barriers in both directions as to where speculators and investors are looking at the data saying, man, this feels like a bit of a trap zone in both directions. And this very similarly lines up when we have a big day of news that everybody is aware of. And what is that day? Well, today is the FOMC meeting. Tomorrow is the second day of the FOMC meeting, and it's expected throughout the space that we're getting 25 basis point cut. Now, what happens if we get a 25 basis point cut and Powell is very, very hawkish, basically really tries to, soften the market, just running away by saying, oh, we're going to look at the data and maybe this will be the only cut, even though it's telegraphed that we're going to be getting multiple cuts. But I'm not the expert on this. We got Caleb Franzen coming in here in just a couple minutes, and he's going to be breaking down what he thinks about how these rate cuts could impact the market, what he sees moving forward, what the signals are that you can look at to get a good indication as to what may be setting up or taking place. So let's look at the chart as we see it right now. The most important one for assets in the market, the dollar index. We talked about this earlier today on the stream, and that is this. That is showing essentially, this goes back, this chart, if we zoom out on this is 2021. The top here is September 2022. And notice on this date right here, where the dollar index broke through this previous resistance. Yes, there was resistance there. You see, came down, found support, bounced, and then on the loss of this, which is right about the first week of April 1st, April 2nd, April 9th, that was when the market had that absolutely beautiful rebound in the market. Let me go ahead and go over to, I don't know where the green room is on here. Hey, Drew. Can somebody show me where the green room is on here? Sorry about that. We got Caleb waiting in the wings. We're going to be bringing him on here. But this is signaling, as I outlined, and I posted this weeks and weeks and weeks ago, and that is when the dollar was going to break down from here. That's risk assets. We're going to start to see some very nice movement to the upside. And what are we seeing here? On this breakdown, Caleb, okay, add to state. There we go. On this breakdown, this is also right when we saw Bitcoin coming back over to Bitcoin right here. Where is April 7th? The first week of April, right here. And look at that. Miraculously lines up. When the dollar broke down, we had bullish divergence coming into this and the market broke out. So enough of what you've heard from me. We got our boy Caleb Franzen in the mix. How you doing? I haven't seen you in a while. What ground are you reporting from today? Because I know you are a traffic vagabond of a man.
What's up, dude? Great to see you. Great to be here. Calling in from Belgrade, Serbia, brother.
Dude, let's go, man. Your hair has affected markets. I remember you were growing it out, and it's very correlated with what was going on in the market. Then you cut it, and the market shifted. So when's the next haircut?
This week, brother, this week. And this is not a joke, guys. This is a real signal. I've actually charted it. Haircuts on top of Bitcoin's price action. It is very bullish.
Well, okay, you got to give us, you've been the Pied Piper of these markets for the last 2.5 years. I mean, obviously you've been in these markets a lot longer than that, but specifically with all this economic, I don't want to say confusion, the confounding nature of where markets sit today based on historical trends and all the nonsense and changes and shifts in data and reasoning and what's going on with money printing and COVID. And everybody seems like they've lost their damn mind, Caleb. What is going on? What signals are you looking at going into the FOMC tomorrow? And how do you think that outline, looks, especially for crypto going into the end of the year? And you're welcome to share charts if you want to.
Thanks, man. I brought plenty with me, so I'm happy to get into some. But let's just talk kind of philosophically about markets and what's been taking place, right? I mean, opinions are a dime a dozen. You can ask 100 economists what they think is taking place in the economy, and you're basically going to get 100 different answers. If you ask 100 technicians what's taking place in the market, at most, you're maybe going to get 5 or 10 different answers, right? So you get a much tighter spread here, a much tighter variance of outcomes. And so at the end of the day, like I said, opinions are a dime a dozen, price is the only thing that's actually a fact, right? And so from that standpoint, if price is the best, let me say it this way, the best crystal ball that we have available to us as investors, because it's the aggregation of all expectations, all outlooks, all pessimism, all optimism combined into one single data point, then price is the only thing that we should be paying attention to, regardless of what headlines want us to believe, right? And so when we look at prices, whether we're talking about equities, whether we're talking about Bitcoin, whether we're talking about a lot of different cryptocurrency charts, we see uptrends just about basically every single place. And what is an uptrend? It's just the production of higher highs and higher lows. And so with Bitcoin now trading well above 116,000 today, this just looks like continuation to me after some recent digestion. It looks like we've put in another higher low right around the 107,000, 108,000. And now what should we expect? We should expect to produce higher highs, right? So my upside bias is still quite a bit higher. And that's basically how I'm seeing things.
I mean, yeah, I couldn't agree more with you. I think people forget being just completely locked into a 15-minute, 1 hour, even a 4-hour chart, even a daily chart. They see down or up and it makes them scared, or they see the price relative to what they're expecting and it makes them excited or it makes them fearful. And I tell people throw the price away as something that matters when you're looking at an asset. The price only matters when you look at it in relationship to the path that it's gone on and the underlying data as it's related to the price. Because if it's a 116.9, this is frustrating to people, but when we were at 169 over here, this was super exciting. When we were at when we hit 109 here, 111, oh my God, most exciting thing ever. So why the hell were people so sad when we hit 111 here? It's all relative to the data and the expectation. But again, the basics you just mentioned there, people forget. Well, on this downtrend, cool. We broke up, cool. On the downtrend here, on this pullback, I should say, we formed a higher low. Now we formed a higher high. Now we formed a higher low. So in this case, on the near term, we're building some very positive stuff. But I got to ask you, outside of just looking at the price on, what we're seeing today, feels good. Back at about 117. Back to that confounding nature of everybody feels like they're arguing in the markets. And it's not just crypto analysts. Even there's, I forget which big financial giant out there just said 93% chance of a recession. And then you get the data here from the Fed, Atlanta Fed, now showing that they're projecting, increase in GDP. So this goes back to, it's not just crypto YouTubers, people on Pump Fund, people on crypto Twitter. We're also seeing a dissent, a divergence of opinion in a massive way about what to expect going forward. We have the rate cuts tomorrow. Where do you stand on that? Good, bad? Has there been indications that finally signaled that there actually is going to be a rate cut? Because I know you're giving pushback on it for a while until something broke the camel's back.
Yeah, so about 2 or 3 weeks ago, we had a pretty clear signal from the Treasury market that rate cuts were unequivocally coming. So since that signal flashed, I've been, pretty vocal that we should be expecting these rate cuts now. The thing from my perspective, it's not my decision to say whether these rate cuts are for right or for wrong. My job as an investor is to make money, not to be ethical or anything else, right? And so if our job as investors is quite literally that, just to make money, buy assets low and sell them high, or buy them high and sell them higher, then I think the fact that we are moving into another easing environment on net is very accretive. There are some risks taking place in macro, but again, price is the only thing that pays us. GDP doesn't pay us. The unemployment rate doesn't pay us. Retail sales don't pay us. The only thing that pays us is price. So I'm just going to keep focusing on price.
I hear that. I know. Will you actually will you highlight? I know you have a chart on it. I was trying to scroll through your Twitter there for a second to find it, but the 3-month Treasury yields that finally signaled, oh man, this is actually looking like it might come.
Let me share my screen on this. Entire screen, bada bing, bada boom. Can you see this, Kelly? Kelly?
Sorry, I'm doing, there we go. Gotcha. Wait, that's me.
Awesome. You can see the chart, right?
Yes, sir.
Perfect.
Got it.
Okay. So what we're looking at here is the 1-month Treasury yield in blue, the 3-month Treasury yield in red, and the effective Fed funds rate in green. I know Treasury markets are super boring, they're super unsexy, but if you're focused on what is the Fed going to do in the near term, these interest rates here in the Treasury market perfectly predicted the hiking cycle that began in 2022. They perfectly predicted the pausing cycle that happened in mid-2023 to mid-2024, and it perfectly predicted the cuts at the end of last year and the pausing cycle since December of last year. And so now, what are those yields telling us? they are telling us to expect a lower Fed funds rate. Again, this breakdown really just happened not too long ago, just a few weeks ago, like I mentioned. So yeah, in early August, I was very hesitant and thinking it was unlikely that the Fed was going to cut rates in September. But as soon as we got this signal, I changed my mind, right? And that's one of the beautiful things about markets is we could change our mind as the incoming data also changes. I have a process. It might be different than other people's process, but this works for me. I'd rather be late and consistently right than early and potentially wrong. So for those of you who were paying attention to the CME FedWatch tool, congratulations. It's just important to remember the CME FedWatch tool has been super inconsistent in the past. And so for me, looking at Fed funds, looking at the 1 month and 3 month Treasury yield, this is where the real alpha is for monetary policy.
Yeah, I mean, when you showed me that, that deal with I saw you posted on your charts, and you were basically saying, hey, everybody, there's no signal yet. It's not the feeling. I think everybody gets lost in their feelings in this market because they want the rate cuts, but they don't realize really what that means and the impact. Also signaling to longer term investors, rate cuts happening also means, hey, something's breaking, right? So everybody's they're arguing these points, and you're like, hey, I'm not seeing it yet. I'm not seeing it yet. And then finally you posted that chart and it outlines it perfectly. Oh, it always, that 3 month Treasury yield always signals. It's like, what is the data that they're getting that gets them to lower those yields that gives a signal? Like, because they're clearly seeing stuff. Everybody else out here is just hoping the market goes up and down.
You're saying like what's causing those yields to move to predict this so perfectly? Well, again, is the market is the best crystal ball that we have available to us, right? And so investors are able to put their money where their mouth is based on all incoming data, based on expectations of future data. And so when investors are seeing certain things taking place, they're going to start pushing those yields lower. And when those yields are coming down, it's because there's higher demand for those treasuries, right? And so if investors believe that the Fed is going to cut interest rates, they want to front run the Fed, therefore pushing those yields lower due to excess demand and creating this effect, right? So that's why this bond market is so smart at predicting this.
Well, yeah, I'm loving it. It's felt like the cycle for Bitcoin, but then even more so for the broader crypto ecosystem. It's a whole different story than what we're seeing in the traditional markets, because I think people forget this is an overwhelmingly emerging asset class, and people think, well, I've been in for 6 months. It's tried and true. It's like, no, it's not. I've been in the market 10 years and I've seen probably 15 different iterations of what the landscape looks like for the market, especially in the last year and a half. We're in a different universe than we were before. And especially since things like Pump Fund, I think we're streaming live on Pump Fund right now, in addition to X and on YouTube. But the creator market and the token deployers, meme coins, Ethereum, stable coins, all these things have taken a huge leap forward, sideways, up, down, around, with different expectations, different iterations, but also the landscape that is surrounding them has shifted so dramatically. So as somebody in the market, you're in traditional markets, but you also have been very active in Bitcoin and, some key altcoins and other things as well in this space. How are you looking at this landscape? How are you able to cut out the noise, if you are, to just lock in on trying to find signal and edge?
I think for me, it's important to recognize the world is always going to change, and in many ways it's also going to stay the same. And so my job is to, exactly like you said, cut out the noise, right? And so, I'm not going to be some on-chain sleuth looking at a bunch of different on-chain data points or looking at this meme coin versus that meme coin or whatever the case is. I just want to trade great setups. I want to own great assets. And so for me, what does it mean to own great assets? It really means owning Bitcoin. It owning a lot of technology stocks, software stocks, cybersecurity stocks, some industrial stocks, the Mag 7, right? The things that are supposed to do really well during a bull market, AKA the high beta names. And then it means owning Bitcoin. And so within my kind of long-term portfolio, Bitcoin's more than 75, almost 80% of my liquid net worth. And, of course, I'm going to be trading a lot of altcoins when I see attractive setups or when I want to take additional risk, but I don't view them as investments. And so whether I'm taking investments or whether I'm taking short-term trades, again, it all just comes down to price, right? So I think even for a lot of investors, I talk about it. I'm an economist myself by training. That's why I have my undergraduate degree from UC Santa Barbara. But, I think as much as possible, I try to reduce my macroeconomics brain and just focus on price, right? Because again, the stock market, whether we like it or not, is the best economist that we have available to us, right? Because the stock market has been able to produce higher highs and higher lows for the better part of almost 3 years now, while macro economists and armchair economists on Twitter keep talking about a recession around the corner and a deflationary debt spiral and all this other stuff. Again, those are just opinions. They're okay to have those opinions, but only one thing is going to pay us, and that's price.
Yeah, I love it. Well, I'm always very appreciative for our audience here at Discover Crypto, also with our partners, Bitcoin IRA, Arculus, and then we got the man of the hour, Mr. Caleb Franzen. I would be remiss not to ask you to pop open your charts and show us some of the things you're looking at. What's giving you your edge right now? What are you looking at going into the end of this year? Because another question here, everybody's fighting with, even some of the smartest people in the space. 4-year cycle. No, 4-year cycle's dead. Oh, it's different. It's not different. I mean, there's no answer here other than, hey, what does the data say? So what are you looking at?
So let me just say this. I don't trade based on 4-year cycles because markets don't go up or down depending on the day of the week, depending on the month, depending on where we are in some imaginary cycle, right? So, I don't necessarily prescribe to the 4-year cycle thesis, but let's just go ahead and talk about the individual charts that I'm really seeing, the things that I'm paying attention to in this market. We're going to go through some kind of layers here, Kelly. So just stick with me here, trust the process, and we're going to get into this. I want to start by talking about investment grade credit spreads. Why is it so important? This chart is making new lows. This is indicative of a low risk environment, and I'm going to prove that in one simple way. If we invert this chart of credit spreads and then overlay the Dow Jones in the lower pane here, do we notice anything about these two charts, guys? They move in lockstep. When the market perceives lower risk, which is this credit spreads chart going down, the market tends to do quite well. And that's what I'm showing here by inverting credit spreads and then overlaying the Dow Jones Industrial Average. Now, the Dow Jones is the most boring, unsexy stock market index in the United States. Why do I care about it? Well, if we look at the IBIT BlackRock Bitcoin ETF with the 120-day correlation coefficient with the Dow Jones, it's trading at an 85% correlation coefficient. Why am I using 120 days? In traditional financial markets, using something like IBIT, using the Dow Jones, 120 days is basically 6 months of price data. So this is giving us a rolling 6-month correlation. And so if credit spreads and the Dow Jones are doing the proper things in this environment, and Bitcoin is doing proper things in this environment with an 85% correlation coefficient with the Dow Jones, good things are probably likely to continue to take place, right? And so I think this is really, really important here. This breakout retest rebound is a setup that I was analyzing and sharing in real time. I also have an anchored volume weighted average price here, getting the breakout, flipping it into support. Let's talk about that a little bit more. What is the anchored volume weighted average price? Here we are applying it to Bitcoin itself. So not using IBIT, but actually using BTC USD on Coinbase. What we're looking at here is the anchored volume weighted average price. This is telling us since the all-time high, what is the market's cost basis? What are investors doing with their actual capital? You could see we got this breakout. Why is this so important? Guys, I want us to go back in time to April and May of this year when we were also breaking above the anchored volume weighted average price from the all-time highs. We flipped it into support, and then after that we had massive continuation. So look, I'm not necessarily predicting that we're going to get massive continuation. I would hope for that to happen. All I know is that the price dynamics right now look very similar to what was happening in April and May, flipping the anchored volume weighted average price from the all-time highs into support. So long as we stay above this level, guys, which is right now trading at 115,000 even, if we stay above that level, it's also trading at 113,401. If we continue to stay above 113,400, we should continue to expect massive upside. That's my prediction from here.
Oh, I love it. I feel like the 4-year cycle narrative, the reason why, and I've talked about this, but one of the reasons why I feel like even if, let's say it was going to play out, AKA the same way as before, I think the timeline leading up into July and then July to now has shifted so dramatically because a couple things. We had Genius Act signed. We had the Clarity Act signed. We're working on the market structure bill. We've got the corporate treasuries stacking like mad. The amount of demand that's coming in from accumulation addresses has gone parabolic in the last year. Ethereum now, it's not just Bitcoin. Now we have Ethereum treasury companies. We have Tom Lee going out there raising $20 billion in Joe Lubin. We got SharpLink. We've got Bitmain. We got Solana is now getting corporate treasury with Mike Novogratz buying about $500 million worth of Solana. Pump Fund is out there, and shout out to everybody on Pump Fund. We see we got 2,520 people in the room right now. Shout out to everybody here. Wherever you're tuned in from, we're happy we could touch you with some knowledge because there's degens. We can degen all day long, but the degening you cannot do on repeat strategy. You have to look at something outside of that that gives you a bit of an edge. Even within the meme coin market, it's understanding when is liquidity going to likely start coming in en masse? When is it going to likely start evaporating? And what I've seen in the last year, but specifically the last 6 months, is an increase of a scenario where risk looks like it's more and more ready to come into the crypto market, despite being at record levels of no savings accounts, with credit going to the max, defaults on credit cards, bankruptcies. But that's why I kind of started this earlier with this confounding scenario where it feels like the market should not persist. But at the same time, is all that data that we're talking about, with savings accounts being empty, with debt being at all-time highs and bankruptcies, are those the same people that are affecting liquidity in the markets, or is this just a tale of two different worlds?
I don't necessarily think it's a tale of two different worlds, because of course we can just focus on some of the negative economic data points. They exist, but we can also focus on some of the positives, right? We just had 3.3% annualized real GDP growth in Q2. We're tracking towards 3.4% in Q3. Real wage growth still looks really strong. Retail sales are really strong, coming out this morning, significantly higher than expectations. The unemployment rate is quote unquote only 4.3%. I know it's been rising, but 4.3% historically is extremely low. Income levels at all-time highs, net worths at all-time highs. Net worths is assets minus liabilities. And so even when we're looking at liabilities, credit card debt, student loan debt, all this other stuff, asset prices at being at all-time highs is creating a positive wealth effect. So there's an abundance of data that also looks really good in this environment. Also, let's think about it, right? I mentioned that Bitcoin and the Dow Jones have an 85% correlation over the last 6 months. When we look at the stock market and the forward cash flows that are expected to take place in the S&P 500, even in the Russell 2000, those are making new all-time highs. Forward 12-month earnings per share are at all-time highs. So when we're looking at fundamentals of asset prices themselves, from a macro perspective, a lot of things are in place to have those keep going up. But this is where the famous saying comes from. There's two of them that I actually want to rattle off. Bull markets climb a wall of worry. There's clearly things to be worried about. I'm not trying to dismiss the things that you mentioned, Kelly, but bull markets climb that wall of worry. And the second one, did I forget what the second one was? I forgot what the second one was. I'll have to pull it up another time.
Well, you've been smash hammering, but with data and fact and good analysis. By the way, I do want to shout out for everybody. If you haven't seen it yet, make sure you're going to follow Caleb Franzen here at Caleb Franzen. And he's got a great Substack. I highly recommend it. It's probably one of the best out there. And I know you're among one of the top people out there with your communities. He does a report, sometimes a few times a week, but regularly. And it's all top-notch stuff. But you've been calling out with pretty damn good veracity and accuracy the wall of doomers that just continue calling every time we see something in the traditional market or in Bitcoin and crypto, that anytime we get 2 4-hour candles to the downside, that was the top. Bitcoin's going back to 12,000. S&P 500 is going back to 3,000. It's like, I don't know where this dooming's coming from, because I see, maybe this is just bias, but I see the investor class and people that are just now getting into investing with the advent of social media and the awareness of the money printing problem and the awareness of the debt, the fact that it took over 200 years to even get to $1 trillion in debt. Now we print a new $1 trillion added to our debt every 2.5 months or so. Are people just waking up saying, screw it, I don't care if I have credit card debt, I'm still going in? I mean, people are just looking like, it just looks like capital wants to just get out of the system and into some investments. Can this persist? Or are we entering a situation where we're going to get some sort of blow off? Because, not to mention Tesla, NVIDIA, Microsoft, Amazon, and Apple. NVIDIA alone is larger than the GDP of Canada. Four of those stocks are larger than the entire stock market in China. And so we're seeing all of this huge valuations and market value going up and market caps with these major stocks. Is there something on the horizon, or is it just stupid to think about that? We're in a bull trend. Let's trade like we're in a bull trend until we're not.
I don't want to say it's stupid to think about that, but I would just say, right, like when we think about the money problem, if you will, we have M2 growth trading at, I think, 4.5% year over year and accelerating higher to the upside. That money needs to go somewhere, right? And right now, banks are lending that money because credit creation, loans and leases and bank credit, and I know this because I used to work in banking for 2 years, helping to manage a $30 billion commercial loan portfolio, loans and leases are on the rise. And so from that standpoint, we are seeing liquidity dynamics supportive of a broad-based uptrend across asset prices. So whether we're talking about gold, whether we're talking about silver, whether we're talking about US stocks, whether we're even talking about emerging market stocks, which are now trading at new all-time highs if we exclude China, Bitcoin is just another variable for that equation, right? And so if we're seeing, this has been the entire thesis that I've had for a long time, right? Is the Fed and central banks around the world are going to print a lot of money, or they're at least going to do a lot of QE. They're going to artificially suppress interest rates. And what that means is that dollar-denominated assets have tailwinds to rise. The thesis is really that simple, and it's our job as investors now to align ourselves with uptrends and pick the fastest horses in the race.
So what do we make then? What would be your context of this chart right here? Not necessarily the correlation, but specifically gold has been trading like a tech stock this last year and a half. It's just been booming to the upside. And we've also seen it's not necessarily a huge amount. Yes, there's an increase in retail purchasing, but there's also a huge amount of sovereign treasury stacking into gold as well. But this correlation very regularly, gold pulls up, Bitcoin tends to follow to the upside and vice versa. But do you think this is going to persist similar like with M2 pulling up? Everybody's expecting this 70 to 100-day lag. Are all these setting that condition that it's kind of silly to think that we're near a top right now when none of the key signals that signal top and Bitcoin are flashing, and M2 is just pumping higher, and gold is just, it's breaking ceilings.
Yeah, look, I don't think any asset has really topped, right? We just had the NASDAQ 100 make new all-time highs for 5 consecutive trading sessions, the Dow Jones at all-time highs. The Russell 2000 is basically the only thing that's lagging, and that's on the verge of making new all-time highs. Even if we equal weight the S&P 500, that's basically at new all-time highs. Value stocks, all-time highs. Growth stocks, all-time highs. Semiconductors, cybersecurity, quantum stocks. Everything is in really strong uptrend. So yeah, exactly like you pointed out. I'm not sure about the correlation between Bitcoin and gold. I think, there's a debate to be made about it. It's what we have firm evidence of is uptrend behavior, regardless basically of the asset, right? And so when we think about that kind of dynamic taking place, again, the bias therefore needs to be that Bitcoin is also going to make new all-time highs. I'm not happy to be wrong on that. I'm open to the potential of being wrong on that. And maybe we do roll over from here. But when we're looking at the weight of the evidence, we don't have anything that's invalidating these uptrends, at least not yet. I have criteria for when those signals might flash and when concerns might be warranted. But right here, right now, I don't see them.
So I'd love to get you to just highlight this chart. You can pull it up yourself after I do, but just this, I thought this chart was very interesting. Williams percent R as it relates to Bitcoin. I actually showed this a few days ago when you posted it, but highlight what the importance of this is. What is the Williams percent R, and how is this giving a potential signal that we may be seeing some upward movement?
Perfect. So in this particular case, Kelly, I'm using the 60-day Williams percent R. Why am I using 60 days? Bitcoin trades 24/7, 365. So using a 60-day length is basically going to give us 2 months. It's a pretty good medium-term cycle indicator as far as I'm concerned. And so what the Williams percent R does in this particular case is it's going to track the high and the low of price over the last 60 days and plot where we are with respect to that high and low. And so the key thing that I really wanted to point out on this chart, this was something that I was highlighting in early and mid-August in advance of the signal flashing, were these accumulation signals. And what I mean by that is when we're getting a full oscillation from overbought, which is the upper bound, to oversold, which is the lower bound. So when we're going from the top to the bottom, and I've outlined that with each of those red arrows, you'll notice that there was one in early 2024 that did not signal because we did not actually get oversold, just to the left of that arrow that you have pointed out. A little bit further, that one right there, exactly. So that was not a signal because it didn't actually get oversold. And so from this standpoint, what we're trying to do now is identify these accumulation periods. In and of themselves, these are not actually bullish signals because we've gone through periods of digestion when this still flashes. But this is, to me, essentially a bottoming process indicator. So with my premium members over at Cubic Analytics, I was highlighting this in advance, telling them when this signal flashes, I'm going to be using this to stack more Bitcoin. And these were the first Bitcoin purchases that I had made since March of 2025 when we were trading around 78, 79,000. You'll notice that this signal flashed at the end of February 2025, and I used this signal to accumulate more Bitcoin. So I'm sticking to my process here, which is a data-backed systematic process, I should say, not systemic. And this is exactly what I'm doing with my capital. So this signal has flashed. And I think that accumulation now is going to prime us now for the next leg higher.
So I got to ask you then, because we have focused a bit on some of the core, I would call it the really the foundation of the crypto ecosystem, which is Bitcoin. Everybody's excited about rate cuts tomorrow. We're looking at over here on a coin market cap. We see, let's get up here to cryptocurrencies right here. Alt season index. Where is it at? I always lose it. There it is. And not this data, but we are seeing quite a bit of movement throughout the space. Of course, there's a hell of a lot more tokens now this cycle than there were in 2018 when I was involved. When you just threw a dart at the board, everything ran 40, 50, 60% a day for months, it felt like. And now it feels like it's a bit of a lackluster alt season while that metric is ticking up. What are you seeing, is whether it's as respect to Ethereum, whether it's as respect to, is alt season also signaled a bit different now in a conjoined sort of outlook between Ethereum, Solana, BNB, XRP, some of these major players with major communities? If you have any charts on these as well, that'd be fantastic.
I have a great chart that I brought exclusively for everyone watching this right now, Kelly, so I'm sharing that. And what we're looking at here is total 3 minus USDT minus USDC. So this is basically the altcoin universe, right? Because total 3 is excluding Bitcoin and Ethereum, and then we're taking out stablecoin market cap as well. We're basically looking at price action over the course of the past year. And there's a few things that I really kind of want to highlight here. First and foremost, we've been making these higher highs, especially relative to these highs down here. Next step is to take out these highs, which are new cycle highs. They would not yet be new all-time highs, even if we get above 1 trillion, but this would be very constructive, 100%. I also want to highlight these 3 moving averages that I have on this chart. In blue, I have the 21-day EMA. In red, I have the 55-day EMA. And in green, I have the 100-day exponential moving average. And what we can see is since getting above this range here in July, we've been able to use this dynamic range as support on several occasions. This is constructive bull market behavior, very similar to basically what was taking place here, even similar to what was taking place here briefly before putting in this lower high, rolling over and getting this invalidation. And so for me, as long as we stay above these triple EMAs, I have to have a bullish bias. My expectation now is we're going to get to this 161.8% price target, which is just the Fibonacci retracement from the cycle highs to the year-to-date lows, which were here in April, on April 7th. And that basically gives us plenty of upside, right? We're not even trading at 900 billion right now. I'm saying we could easily get to 1.3. I think a lot of people might look at that and say, Caleb, that's very, don't get too far out ahead of your skis, right? But what I want to highlight here, if we zoom out on this same chart a little bit more and we look at the 2024 highs to the 2024 lows, using that Fibonacci retracement, the 161.8% extension was hit in November and December of 2025. In fact, we exceeded that level. So I'm just using the same exact methodology here, drawing a Fibonacci from the high to the low of a range. So long as we stay above those exponential moving averages I had here, then we should have gas to go up to 1.3 trillion.
I really like that because that actually cuts out some of the noise or pushback. I can already hear people. I know they're thinking it, but it doesn't account for what about all the new tokens and what how come there's also, a lot more tokens that have been deployed? Well, this accounts for that because it's the market cap of the altcoins, all altcoins in the space minus stablecoins. So it doesn't matter if there's more tokens or like for instance, if people talk about XRP going to a certain price, which has already exceeded its previous all-time high, look at another coin like Avalanche or Chainlink. You think, okay, can this hit its previous all-time high and, make moves beyond that to the 1.618, 2.618, whatever? You have to account for one, are you looking just at the price? And if so, how does that account for all the new tokens that are available in that ecosystem? If you look at just the market cap of that asset, and I do this regularly, and I'll show everybody just as an example, just so you all can understand this. When we're looking, for instance, let's go to Chainlink. If we look at Chainlink, very simple TA here. Let's go to all. Here's price. So people keep wondering, what can this do when it hits previous all-time highs? It can have the same extension to the high. Well, go to market cap and look at where this is. Now, this isn't a hell of a lot different, but if you go to some other tokens, there's been million, like Filecoin. I like Filecoin, but a huge amount of token inflation in terms of the number of tokens that are available. BNB, some of these other tokens that are out there. You want to look at the market cap, not just the price extensions, because there has been a changing landscape in that particular ecosystem versus what we saw the last cycle. But it's super exciting now, especially now. I'd love to get your take on Ethereum specifically, because there's some people talking, 15,000. Some people are saying now 5,500. Other people are saying 25,000. What's your thought on Ethereum going into 2026?
I think the way I'm viewing Ethereum is I still can't give it the benefit of the doubt because it's basically been the laggard up until basically May of this year. And over the course of the past 4 months, it's just absolutely ripped face. So I want to congratulate everyone who's bought and held Ethereum because you've made new all-time highs. I think the beautiful thing about current price structure, I don't have the chart with me, but we are flagging above those prior all-time highs. We are tightening up. So long as we stay above those former cycle highs, I think you have to have an upward bias. If we happen to fall below the prior cycle highs, you can reduce some of your exposure. You can change a little bit of your bias. You can get a little bit more defensive. But the chart looks fantastic. And, I don't see any reason to necessarily fade this.
Yeah, I mean, I'm super excited about this. One of the things I've noticed on the ETH to Bitcoin pair, interestingly, I could extend this out one more day, but, everybody's so excited about this, and this has been fun. This has been great. But, we have effectively been in about, let me do this on the daily. We've effectively been in about 1,120 day, really still a downtrend from this inflection point when it rotated down. This has been nice, but as this stands right now, this technically would still be part of this downtrend because we have not even broken above the previous range lows here. But I do think that things start getting excited and a little bit questionable once we get into this territory, because does ETH just push into the zone, get rejected and break down, or does the stablecoin deployment and integrations and so on and so forth start to break, what we've seen as a trend in previous cycles with altcoins as it relates to Bitcoin because of the new legislation and the types of players that are going to be getting involved. But I couldn't be more excited about where we're at, where we're going. Is it frustrating sometimes? But then every time I'm frustrated, I realize I have expectations, and the crypto market is not here to meet my expectations by any means. It's actually here to break your expectations. And those of you that have a better strategy, you can get deployed when everybody else's expectations are broken. You're getting deployed into the market so you can ride that back to the top when it happens. So super exciting there. Well, I don't want to keep you here all day. I know we probably have a couple more things to talk about, but just any other topics or alpha or any other things you'd like to bring up that you're looking at right now or watching, whether it be particular topics or particular coins. I'd be remiss if we didn't at least take a look at Solana as well and your thoughts on that.
Sure. I mean, look, I have to be bullish on Solana here. I had a pretty bullish signal trigger not too long ago, and I think that was a great opportunity to get long. I shared that with premium members of Cubic Analytics. I want to go back to what we were actually talking about. I know we've been talking a lot about Bitcoin, but that really is my focus because I view Bitcoin as the rising tide that's going to lift all boats. So if Bitcoin has tailwinds in this environment to rise, if we're seeing bullish signals, if we're waiting on some new bullish signals to flash, then that should be telling us that altcoins on the aggregate are being set up for really attractive opportunities. So everything for me starts with this kind of bottom-up framework, or I should actually say top-down framework. So with Bitcoin, once again, we were just talking about that 60-day Williams %R oscillator. I want to mix it up a little bit, actually. We're still going to be looking at that 60-day Williams %R oscillator, but I want to now go ahead and identify some actual momentum thrusts here. So same exact indicator, but instead of looking at going from overbought to oversold, what we're looking at here is going from oversold to overbought, from oversold to overbought, from oversold to overbought. You'll notice once again, this one here did not trigger a signal because this never got oversold here, right? So once again, these to me are actually bullish signals. There are two failed signals that really occurred here, but if you bought those failed signals and just held on for 3 to 6 months, you were in profit substantially, right? So I don't really want to call them failed signals, even though more downside did still occur after they flash. But let's look at the other ones. This one here flashed in January of 2023. This one here flashed in October of 2023. This one here flashed in September of 24 before Bitcoin went from 63,000 all the way up to 112. And then this one flashed here at 87,000 before we went up to 124. So right here, right now, because we just flashed that oversold condition, we should all be looking for Bitcoin's 60-day Williams %R oscillator to now become overbought. We want to get this momentum thrust, right? Because a momentum thrust is what? An overwhelming amount of demand coming into the market. There is no way you can tell me that a bunch of buyers coming in, putting their money where their mouth is, flocking into an asset and buying as much of it as they possibly can, How is that bearish when investors quite literally need to put their money where their mouth is, right? So for me, this is going to be an ultra important signal if and when it flashes. This is what I think everybody needs to have on their radar right now.
So just to kind of further illuminate that, your signal isn't necessarily when it hits that super oversold area. Your signal is when it actually eclipses back up into the top and starts consolidating up there again.
It just needs to get above -20. If we can get above -20, so between -20 and 0, that is going to be the initial signal, right? So I've tried to highlight each of those here with these green lines, which is that first piercing back above the range.
I love it. I love it. Well, let's look at your Solana chart, man. I know you got something charted up on Solana.
Let's go. Sorry, I stopped sharing my screen. I'll get that booted up here again. Okay, so with Solana, what's important here on Sol? First of all, I think on this Solana chart, we're going to be getting up to $420 per Sol. This is a beautiful chart. I want to just highlight here, if we add on our 50 and 61.8% extensions, we got this breakout here on September 10th. That was at 218. We're currently sitting at 238. This isn't any significant accomplishment, but what I do want to highlight here is that this range is valid support, right? So if we come back down into here, that would be a buying opportunity with the expectation that we're going to retrace back to these highs. I also want to go ahead and put this chart in logarithmic scale, because if we put this in log scale, we now have a 161.8% extension that gets us to $595 per Solana. That's roughly, after today's price action, how much upside is that? 151% implied upside. So, what are Solana-based meme coins doing in that environment where Solana's up 150%? What is something like JTO doing in that environment? What is Orca doing in that environment? What is even Ethereum doing in that environment? AVAX, Chainlink. I mean, again, this is a rising tide lifts all boats kind of dynamic. I think Solana's the 4th or 5th largest cryptocurrency in the world right now, right? Even not including stablecoins. So if we have BTC, ETH, XRP, and BNB, then there's Solana right there. If this is one of the top names in the entire ecosystem having 150% implied upside, the rest of the market should be doing just fine, right? So I think this is fantastic.
Oh man, Caleb, you and I have been in, for those of you that don't know, Caleb and I have known each other here in the space for, I don't know, is it 4 or 5 years? It's been 3, 4, somewhere. It's been years. But it's been wonderful to watch you grow in the space. Everything you've built over there with Cubic Analytics, how much not only praise that you get and deserve, but also the amount of value that you add despite your paid Cubic Analytics, how much you just give away. I mean, you give so much alpha away in all the content you share over on your socials over at Caleb Franzen. I do want to just shout out again. I'm going to pull that up here, right here. Where is it at? Boom. There it is. Make sure you're giving him a follow at Caleb Franzen, CalebFranzen. Kelly, we can read why you're spelling it, because so many of you end up following fake accounts, spammer accounts. And I know, Caleb, you're just like me, because we're out here doing content. We probably both have 30 to 100 fake accounts out there. So make sure you're following the right people. Make sure you give them a follow. Check out what's going on over here at Caleb Analytics, at Cubic Analytics. But again, I'll give you a last closing words here. Any thoughts you'd like to give going into tomorrow and then potentially into the end of the year?
Nah, man, thank you so much for having me. This was a blast. I know we've been trying to get this going for a while, so I was happy to make some time and finally get this going. Hope everyone enjoyed watching this. And yeah, like Kelly mentioned, I basically give away like 80 to 90% of my analysis for free. So come check me out over on X. I even have the free newsletter where I'm publishing free stuff. I'm doing podcasts all the time. So as much as possible, I'm always trying to share as much as I can, sharing what I'm actually using to make investment decisions myself, right? Because I can't manage your money. I can't manage your portfolios. But what I can tell you is exactly what I'm doing with my money. And that's my entire goal here with what I'm sharing on X, with what I'm sharing over on Substack. So Kelly, thank you so much for having me, brother.
Hey, I appreciate you. I look forward to actually sharing a beer with you sometime in person. We've yet to I almost said skin to skin. That's not what I meant to say. We haven't been in the flesh yet, but hey, man, it's good to see you. Everybody, make sure you give him a follow, and we'll see you in the next one, Mr. Caleb.
Cheers, brother. Peace.
All right, adios, my friend. Now, everybody, how great was that? Caleb always brings such a wealth of knowledge, and also really breaking down what he's seeing on a really alpha basis. It's not my bias. It's not, I like this coin. I love XRP. It has to go up because I like it. It's not that. We need to look at the data behind the assets we're talking about and what that data is suggesting, the fundamental shifts, what it's looking like in the context of the global financial market, what it's looking like in the context of the crypto ecosystem, and also the changes that are going on. So always appreciate having them on. Now, before we go, I do want to just highlight a couple things here, especially looking at the others chart. Let me pull that back up. Where's that at? Boom, boom, boom. I just shifted all the stuff. Looking at the others chart, this has just really been chopping people down like a freaking lumberjack. People expecting the altcoin season, and it kind of was one here, but then it broke down, and it kind of was one here, and it broke down. What I'm seeing in this isn't something that is broken spirits. I'm seeing that this is given opportunity here. My mouse is all jacked up, but these zones that I'm showing you, these lows, this has been giving basically the sideways range. And this is the others chart again, everybody. This is everything outside of the top 10. So all these altcoins, not the ones up here, but let's actually pull it up like this. Everything outside of the top 10 market cap, everything else, we're seeing what's going on here. And I think this actually is setting up an incredible base to launch from for all of you that have been waiting patiently. Not everything is going to move, but if you are diversified in your risk positions, meaning you're not all in on one meme coin, unless it's something you really believe in and it's not your life savings. But when you're looking at this is telling me, with the landscape we're seeing, with the rate cuts coming tomorrow, with more down the pipeline, down the line coming in October and also in December and likely in early 2026 as well, I think we are in for some astronomical moves in this market. So everybody that's watching on X, whether you're watching on my X, by the way, if you'd like to follow me, it's right here at Kelly Kellum. Make sure you're giving me a follow. Follow the correct person. It's just over 44,000 subscribers here. Make sure you're showing some love. Also over on Discover Crypto, family. That's my dog right there. Look how we woke up today. Dog was sleeping across me, but Discover Crypto as well. Make sure you're following. That is right here. I'm just going to show you before we do go. Make sure you're following Discover Crypto right here at Discover Crypto _. And for those of you that are tuned in over on Pump Fund, we love you. We appreciate you. Today was our first stream on Pump Fund this morning. We let it run for quite a while as well. Drew got on, and we let it run a little while after that. We had trouble getting it going when the stream first started, but we did kick it live. I do believe it's live over there. We did start the DC stream token. It's not meant to be, hey, go and buy this token. That's not what it's about. This is for us to get involved with the platform, get involved with every one of you that's over there. All of us here at the HIT Network, Discover Crypto, Blockchain Basement, BitLab Academy, this stream you're watching right now, Discover Crypto. We're here to make sure that you understand how to read the data in this market. Even within the meme coins, there's certain things you need to be paying attention to, not just this is exciting. If you're doing it because it's exciting, that's fine. The point there is just don't do it with your rent money. Do it with money that you can literally throw away, because I've been a part of round trips. I've been I've been victim of pump and dumps. We've all been in this market here at the Discover Crypto family for a long time. And we want to make sure that you guys don't fall victim to the silly errors that can really save yourself a huge amount of heartache if you just look at the right type of data, if you follow the right type of people and different people. So it's all not just one voice, but we're going to be keeping this going on Pump Fund, of course, on X. We'll be back, I believe, on the Discover Crypto YouTube channel. We've been in jail over there since we streamed the Apple announcement event last week, but that should be back live either tomorrow or the next day, something like that. But we're going to be keeping this going, breaking down the charts, breaking down the signals in different voices with slightly different lenses, looking at the news, also identifying major shifts that are happening in different parts of the ecosystem. But we love you guys. We appreciate you guys. I hope you all have an absolutely fantastic day. Don't destroy your monetary value in your life like we saw with the fall of Rome. Be like Bitcoin. Be like people that are making it in this space, and make sure no matter what you're doing with profits, you're always rotating some into long-term hold, hopefully in Bitcoin or something else, and also doing something with that capital where you're cashing something out along the way to where you can also affect your life, so you just don't end up in this market with having screenshots of what's happening on your portfolio that you're never able to realize. We want you all to succeed. We want you to change your lives. We want you to change your family's lives. That's what this is about. With that being said, I love you very much. I appreciate each and every one of you. Put your hand on your heart. Tell yourself that you're grateful to have this body, that you're grateful to be alive. You got 2 legs, 2 arms. If you do, if you don't, if you only got 3, then you're unique and that's fantastic. But let's all be a little more forgiving of each other. Let's learn together. Let's grow together, and let's do this. Everybody, hope you have a fantastic day. Shout out to our channel partners, Bitcoin IRA. Remember, if you're trading, day trading, there's no reason why you can't set a little bit of that aside and day trade up to 80 different cryptos here on Bitcoin IRA and do it. Basically, save yourself a tax headache with some of it so you're not losing a great deal of money there. You can give them a call. They'll get you all set up. 1-877-936-7175. Head over to bitcoinira.com for more information there. Let them know Discover Crypto sent you. They'll take care of you. They'll give you a special deal, I'm sure, as well. Of course, also make sure you're protecting your crypto, protect your future. Head over to getarculus.com. Use code DC20, DC20 for 20% off. The best crypto cold storage solution there is. And with that, everybody, I hope you have an absolutely fantastic day. I'll see you in the next one. Adios, muchachos. That's what we got. Let's go.
We just wanted to take a quick second to shout out our sponsor, Arculus. They are a cold storage hardware wallet, helps you secure all of your digital assets for the future. Just tap this thing to the back of your phone and boom, you're in. We wouldn't be able to do this without them, but also wouldn't be able to do this without you guys, the Disco fam. You've supported us a lot over the years. If you want to support the channel now, just use the code DC20. It gets you 20% off this card. It's the #1 way you can support this channel going forward. Thank you for your support. We'll see you at the top.